Hello traders, and welcome to my first weekly Forex forecast here at the Money Markets channel. My name is Rafael. As some of you may not know already, I will be joining a partner with Omer. So we will be looking to add more value and content to the trading community, and you will be able to enjoy much more content and analysis and in the longer time frames as well. This will be a free YouTube market forecast every Saturday at 1 p.m. GMT, uploaded on the channel. And for the members only area, we will have daily live sessions Monday to Thursday and much more in-depth analysis on the different instruments you will see in this list. For YouTube, we're going to have certain instruments that we'll be able to cover in a basic way. And also, if you don't know, I have extensive experience in market analysis. I have worked with market analysis firm, and I have also worked with several brokerages. So I will be also starting a small how to start trading series here at the channel. So I will be giving you information and education for things that you haven't seen before and you don't know, because the information is not provided online for you to understand, especially if you are a trader that you trade for the first year or less than 5 years. Okay, so let's have a look what we have in the week ahead. So starting off with dollar index. Okay, we are starting off with the dollar index because obviously it is the main currency, the US dollar, that we measure the value of the financial markets. So it's very important to track the dollar index, and it's going to give us a rough estimate what we can expect for the rest of the instruments and commodities and indices as well. So for the dollar index, we can see that we are still trading within the cycle from 28th of December 2023. It does not show us any indications of possible reversal or weakness at this stage. And entering the next week, we can see from the current levels, or even with a small pullback, a continuation higher towards the 104,500 area. So we will be not looking to sell dollar for the next week ahead at least. Consequently, with the dollar yen, as you can see, we are still trading within the cycle from 28th of December as well. With this structure, we got a small pullback. However, we still see much more strength in the dollar, so we will be not looking to sell dollar yen by any means at this stage, with a possible continuation higher towards the 150 area at least here. Okay. Then we have the euro dollar, which has been dropping nicely since the peak of 28th of December as well. Entering the next week, either a small bounce or from current levels, we can still see continuation lower towards the 107 area. However, at this stage, we do not like to take bigger risks here, because we have been selling from this area, so we are actually in a risk-free trade. So as long as we are below this peak of 109,300, we can potentially see the pair visiting the 107 area right here. So we are not looking to buy the euro dollar at all. Similarly with the dollar, pound dollar, as we can see, it has been in a range for a while now, right here. Okay. And entering the next week, we can see also a possible drop towards the 125 area at least. So we will be not looking to buy pound dollar at this stage. We can only see the highest probabilities towards the downside and to revisit the 125 area at least right here. Okay. Now for the minors, we will have a look at the pound yen and euro Oz. As we can see, pound yen has been trading higher within the cycle that started from December the 14th, 2023. It has seen more upside right here. The price action is not indicating any possible signs of pullback or rejection lower. So for the next week ahead, we could start seeing a possible ending structure towards the upside. We do not like to chase it higher. It's at this stage it's risky for us. However, we can still see possible continuation higher as an ending structure, and sometimes within the next week or month, we could start seeing a pullback in the pound yen. However, at this stage, it's still incomplete. The way that the price action is right here is very corrective, so it's not indicating any possible signs of a drop yet. So this is what we can see in the next week ahead for pound yen. Now in the euro AUS, we can see that we are still trading higher from the cycle of January the 2nd. We have seen this pullback right here, and from the current levels above from 164 area, we should potentially see more upside towards 167,500, 168 area. So we are not looking to sell euro AUS at this point unless we see a break lower below 163,500. Then at this stage we might consider, but at this point the cycle is indicating for us incomplete. So the highest probability chance is to see a push higher towards 167,500, 168 area. Next, we will have a look at the indices, the SPX or S&P 500, however you like to call it, which it's still within the cycle from 27th of October 2023. And this cycle is indicating for us a possible ending structure from this price action right here. As you can see, push higher. And next week, we should be able to see the ending structure and weakness in the price action right here. So, and then the next thing we are expecting is a drop, a bounce, and a drop minimum to correct the cycle from 27th of October. Now, there is also a likely chance that indices could be seeing a bigger cycle. However, as you know, the longer time frames, we are not covering them here on YouTube at this stage. So this is just for the next 1 to 2 weeks ahead what we are expecting. So by any means, we are not chasing the indices higher. We do not like to buy at this stage, and we are anticipating to see this pullback. Similarly, for Nasdaq, because somebody was asking about Nasdaq last week, it's also the same cycle. So from 26th of October 23, Nasdaq. So what we can see for the week ahead is potentially a possible ending structure, something like this. Then we should see a drop, a bounce, and a drop. Okay, that's what we can see. Possible ending structure. We do not like to buy at these levels at this stage, and we are anticipating to see minimum this pullback before we can revise. Now for gold, metals, and we're gonna go through gold and oil. For gold, what we can see is that after the December the 1st peak here at 2,146 area, we are still within the corrective cycle from that peak. So we can still see this possibility. So the cycle is extending to correct. We are not looking to buy at this stage with this price action and this level in gold. The highest probability chance is to see either a small bounce or a drop from this area, okay, to retest at least this zone of 19,980 right here. especially when the RSI indicator is still respecting this channel, this price channel right here, this RSI channel. So it's more likely to see a drop in gold. If somebody was selling from this area, it should already have moved his stop loss to break even, so he should be in a risk-free trade. At this point, there are these two possibilities. So if we are going to initiate a new trade, we should keep this in mind, especially as long as we are below 2040 price, the highest probability chances for gold to drop towards 1980 area at least. Okay. Now, very interesting, WTI oil, crude oil. As we can see, it has ended a cycle, the first leg of a cycle that started from 28th of September from the 93,900 area right here. And it is correcting right now. This bounce right here, it's still corrective. It doesn't show us any indication that this is a reversal, by the way. It's entering the Fibonacci extension area from the first leg and the correction from 77,630 towards 82,700 area, which at this zone we can still see a small continuation higher within the next week into this area. However, the price action will determine whether oil is going to drop next below the 68 area, or whether it's going to correct and continue higher from here as well. So at this stage, if somebody was buying from this area, it should be on a risk-free trade and either take profits and do not take risks within this area to initiate any buy setups at all, because the price action again will determine what happens next. And especially oil, it's actually trading, it's correcting since a cycle that started 2 years ago from March 2022. It's still within that cycle. So in the weekly, monthly time frames, it's not bullish yet, okay? And also there is a likely chance that this cycle can extend from March 2022. So for this stage, again, oil, it's going to show us from this zone right here, this area, what happens next in the shorter time frames, which is for the next week or 2-3 weeks ahead. So keep that in mind if you are trading oil. Obviously, within the members area, we will be able to go through the live sessions and explain the longer time frames and the cycles, so you will know them as well. And finally, I would like to go through ETFs, US ETFs. One of the ETFs that we will be covering for free here on YouTube is the 3Qs. Some of you may already know the 3Qs. It's very similar to Nasdaq, okay? It is within the cycle from the 26th of October 2023 as well. This cycle should be ending very soon. We can see a possible ending structure for the week ahead in this area right here, and ideally we should see this drop, bounce and drop for the next 2-3 weeks ahead. Okay, so we keep that in mind. And we do not like to chase the 3Qs higher as well, and we are anticipating to see this correction at minimum to correct this cycle right here. Okay. With that note, I would like to mention that you can trade any of these ETFs using our main partner broker, One Royal. You can find the link to sign up in the description, which consequently, if you sign up with our link in the description, you will qualify to enter our trading community, in which we provide, we have a special agreement with them, and we will provide to you a cashback on your trading volume. So what the cashback is, it's at the end of every calendar month, according to the trading volume you have generated, you will receive back up to about, on average, it's 20% of your trading costs. Trading cost, as you know, it's a spread or the commission, depending which account you would choose to use. We will distribute back into your trading accounts 20% of that cost. So this is an amazing opportunity for you to trade with one of the best trading conditions in the industry, and plus receive cashback. So you are actually benefiting from much lower trading costs than any of the brokers you might be using right now. And stay tuned, by Monday I will be dropping the first episode of the How to Start Trading series, which I will be revealing some important information about brokers, and you will understand why we are actually recommending our main partner broker, One Royal, as well. And it's going to be a very good education, especially for the beginners and the people that are trading for less than 5 years right now. Okay, so with that note, I would like to wish you a great weekend and a great week ahead. So trade safe, and we'll see you in the next video.